Hi guys, hello again. My name is Luca Santos. I'm on the Technical Market Analyst here at ACY Securities. A bit different, right? First time we are on a sort of a meeting room with a whiteboard on the back. I'm here to discuss how can we enter in a trade and how is my favorite sort of setup, but I wouldn't call it setup. I would call it more a entry model and risk diversification into the same pair. So today we're going to learn how we can, identify those places and how can we compare the risk and how can we apply risk management towards our entry, right? So it's a fundamental way that you need to have risk management, otherwise you won't survive into the market, right? If you apply 100% of your capital in one trade, then your life is only one, right? But if you apply 1%, you have 100 times. And if you lose 100 times in a row, then you have to change your strategy, but it's quite impossible, not impossible, but it's quite impossible. You lose 100 times in a row. So this is why you're using 1%, 0.5% of your account balance, even less, 0.33% is a good way to manage your risk, and this is why we're here to learn today. All right, let's get to the whiteboard just behind me. So how do I identify a sort of accumulation? Where do I get my entries, right? So the market has three phases pretty much. We have a upward uptrend, right? So where the highs are getting broken and we are forming higher lows, lower highs, sorry. And we have a downtrend as well that is just the opposite. So we're gonna have something like that. And we're gonna have the consolidation phase, or if you want to call it accumulation phase, right? So at the accumulation phase, it's when the market is ranging between point A and point B. We just have something like that, right? So you can call it those points A and B as resistance and support. Or if you want, if you prefer, you can draw your support and resistance or demand and supply zones just here, right? So you have your zones on the area, same as on those ones, right? So should be looking like something like that. Which one do I prefer? Well, to enter into my trades, I do prefer accumulation phases, but of course I like trend, right? So without the trend, we can't have any profits on the market. So we need the market to be trending to some way, either up or down, so then we can profitabilize from this, let's say. So how do we enter into a accumulation phase? Well, it's pretty simple. And why do I use accumulation as my entry point is a very simple reason as well. Okay, so let's say we are coming down, right? Let's say we are on a downtrend. So we are starting from here and we are on a downtrend. And then at this point, the market starts to consolidate, so accumulate, right? Why does that happen? Does anyone have a clue? If you does have a clue, comment down below before I tell you. So pause the video and comment down below. As you're listening right now, give us a thumbs up. Subscribe to the channel, all right? So let's get back to it. So why does this happen, right? Why is this area happening at the moment? As we are coming down a beautiful downtrend, we had like 1, 2, 3, 4, 5, and then we are accumulating. Well, accumulation has two ways to interpret, right? So you have, if accumulation is coming from a trend and then it happens, is a profit taking, right? And if we are accumulating, but like for long periods, like days and maybe sometimes weeks, then it is accumulating positions so we can start a trend, maybe up or maybe down, we don't know. But for that, let me take this blue off here. That is the best point for us to enter into our position. Why? Because the risk, it's minimized, and we can place or take profits and stop loss accordingly to the volatility of the market, right? So how would I interact with my positions? Well, if I know that my fundamentals, first of all, we need to know, this is only an entry model. This is not a strategy. So you need to have a bulletproof strategy, and then you can implement these after you know the direction you want to follow the market. Then you can implement this entry model, okay? So let's say my direction for the market direction is down, right? So I want to short this market. I want to keep selling this market. Not because it's on a downtrend, but because my fundamentals are lined up for short positions, right? So basically, let's do it all again. We're coming on a downtrend, we're accumulating, right? This is a profit-taking phase of the market. My direction and my fundamentals are downward, right? So we want to keep shorting this market, right? So after we take in consideration all of those strategies, and then, you have to define the direction, you have a few ways. To define the fundamentals, the macro aspects of the market, you have another way. So everyone would be different on this part. So this is why, if you guys want me to talk about a bulletproof strategy, comment down below, and then maybe we can do a series on that, all right? But anyways, so coming back, where would I enter if I know that I want to short this market? Well, my first position on the short would be on the top, right? So let's say I have one short position here, right? So my first short position would be there. My second short position, if I want to, divide it by 3 entries, 0.33% each entry, remembering that we are using only 1% of total equity, all right? So we're using only 1% of our total equity. What that means is, if you have $100,000, we're using $1,000 on this trade, okay? If you have $10,000, we're using $100 on this trade. If you have $100, we're using $1 on this trade, okay? So we have to minimize the risks and amplify our returns. So we know that we're using 1% of risk, but wait a minute, I'm dividing my position. So how do I divide my positions how do I divide 1% in 3 positions? Well, we know that 1% divided by 3 is 0.33%. So 0.33.33333, right? So we're only going to use 0.33%. So we're going to use 3 positions of 0.33%, right? So as we know, the first position here is my first 0.33%, okay? There it is, okay? Then the market keeps going down, and after a few hours, after a few days, we're still in ranging, and I add another position on here, right? And this is another 0.33% position. So right now, I have 0.66% of my equity on the market, and I keep, for the 1%, I still have another 0.33%. Where should I enter? Well, after the market, continues to go down and come and retrace this area again, it will form a resistance or support or a demand area, whatever supply area, the way you want to call it, right? So let's say we have an area, an interesting area for the price on this space, right? And this is where we're going to add another 0.33% position, right? All right, so there we have it, a first entry or second entry and the final entry, right? Now, there are so many other ways that we can use the accumulation phase to integrate another position in the market. The way I like to use it is, this is the basics, right? So this is the, you know when you want to do a bread and it's all the simple ingredients, there it is, an entry model with the simplest ingredients you can ever imagine, right? Now, how can we set the stop loss and the take profit? I have to leave for another video. So if you guys want to know how can we set the take profit and the stop loss on this entry model, please comment down below and give us a thumbs up. If we reach a fair amount of likes on this video, I will come here and disclose how I place my stop loss on this entry model and how I place my take profit. All right, so that's it for today. If you have a trader that it's a friend, send this video to him, and yeah, let's spend the good content. All right guys, see you in the next video.